In today's video, we're talking about one of the most important events in the stock market, earnings season. What is it? Why do stocks move so much during it? And what numbers does Wall Street really care about? Let's break it down.
Earnings reports are quarterly financial updates that every publicly traded company is required to release. These reports show us how the company performed over the past 3 months, from how much revenue they made to how much profit or loss they generated, and what they expect for the future. Think of it as a financial report card, and investors, analysts, and the media are all watching. That's why stock prices can jump or crash on earnings day, sometimes within minutes. Now, what is on the financial report card, you might ask? Well, there are 4 main topics we will discuss today: EPS, revenue, margins, and forward guidance. EPS. This is the most widely watched metric. EPS tells you how much profit a company made per share of stock. For example, if a company made $1 billion in profit and has 1 billion shares outstanding, its EPS is $1. The math behind it being net income minus preferred dividends divided by weighted shares outstanding. Before earnings are released, Wall Street analysts estimate what the EPS should be. That's called the consensus estimate. When the actual EPS is above that number, it's called a beat, and that's usually good. If it's below, it's a miss, and stocks often drop. Another key is the company's revenue, which is the total money a company brings in from sales before expenses. If the company brings in more than expected, it's a good sign. But even if profits are strong, weak revenue growth can be a red flag about slowing demand. To figure out an estimate of the company's revenue, you can use this equation. Revenue equals price per unit times number of units or items sold. Number 3 on the list is forward guidance. This might be the most important part of the report. After showing how the company performed last quarter, management usually provides a forecast for the next quarter or the full year, which can include projected revenue, profit, and sometimes operational details like expected costs or capital spending increases or decreases. Forward guidance being scrutinized because even if the company beats EPS and revenue, if it says it expects a weaker future, the stock can tank. Or the opposite can happen. A particular company could miss revenue and EPS but have a strong forward guidance and the stock could rise on optimism. Wall Street is always looking forward, not backward. Forward guidance can also be affected by outside pressures due to geopolitical factors, trade, and the economy. Keeping track of recent news or issues around these topics could indicate whether the company you're looking at may have some troubles in the future. Margins measure how much profit the company keeps after paying for the cost of doing business. You'll hear terms like gross margin, revenue minus cost of goods sold, operating margin, profit after operating expenses, net margin, final profit after taxes and all costs. Shrinking margins could mean rising costs, supply chain issues, or pricing pressure. Healthy margins are a sign of operational strength, and of course, investors in Wall Street love that. Now, with all these points we have talked, it may seem like a lot to take in, but there are many ways to get access to any of this info we have discussed with a quick Google search, or many times in whatever trading platform you are using will give you access to this information and allow you to do your own due diligence. Whether you're investing for the long term or trading short term, understanding earnings can give you an edge into what is going on within the company. But please be aware that trading around earnings releases is very risky. Options are hit with high implied volatility, and stocks can have big swings up or down on good or bad reports. Please do not over leverage yourself or make risky bets. It's generally safer to wait until after earnings to play the moves if that is your goal. Note that this isn't financial advice by any means, and you can do whatever you want. Just be cautious. If this helped break down earnings reports for you, or if you enjoyed this video, kindly hit that like button, subscribe, and hit the bell for notifications on the next video. Also, comment below if there are any other topics you would like an explanation on, and I will be glad to cover them. Thanks for watching, and stay safe in the markets.